big changes are on the horizon for UK car tax. And honestly, it can be a lot to get your head around. That's why we've teamed up with the experts at ProTax Accountant. They put this entire guide together. Because, this is exactly what they do. They help people just like you make sense of these tricky updates.
Okay, let's just jump right in with a number that might make you seriously second-guess your next car purchase. Thinking of buying a new, high-emissions car? From April 2025, you could be facing an unexpected first-year tax bill of this much before you even drive it off the lot. Yeah, that's a huge shift, and believe me, it is just the beginning.
Navigating UK tax law can feel like a maze, right? That's exactly why we've brought in ProTax Accountant. I mean, these guys live and breathe this stuff. Their expertise is what's powering this entire breakdown, making sure you get clear, practical advice that you can actually, use.
Okay, let's dive into what's on the menu. We're going to cover the new road tax rules, what's happening with company cars, the massive shakeup for electric vehicles, some key guidance for business owners, a little peek into the future with pay per mile, and then we'll wrap it all up with an action plan for you.
So the big question is, why? Why this huge shakeup? Well, it really boils down to two main things. First, there's this massive black hole appearing in the Treasury's finances. As more of us go electric, the money from fuel duty is drying up, and they need to fill that gap. And second, it's a pretty clear push from the government to get us all thinking greener. They're making pollution more expensive, and the tool they're using for this, it's the Vehicle Excise Duty, or VED, and that's what's changing.
Wow. Okay. Just look at this table. The difference a single year makes is pretty staggering. For a lot of popular family cars, maybe a typical SUV, the first-year tax has literally doubled. Doubled! And if you're looking at cars with higher emissions, that cost is just rocketing into the thousands. This isn't some small tweak, folks. This is a fundamental change to the cost of ownership right from day one.
All right, let's shift gears. If you've got a company car, I need you to lean in for this next bit. This is super important because these changes are going to hit your take-home pay, all thanks to something called Benefit in Kind Tax, or BIK.
So what on earth is BIK? Think of it like this. It's a tax you pay on the perk of having a company car. HMRC sees it as part of your income. They look at the car's list price, how much CO2 it pumps out, and the type of fuel it uses, and they use that to work out how much extra tax you need to pay for that benefit.
So how is it actually calculated? It might sound complicated, but it's a three-step process that's simpler than you think. First, you just need to find the car's list price and its CO2 emissions. Easy enough. Step 2, you look up the BIK percentage rate from the official HMRC tables. And finally, step 3, you multiply that list price by the BIK rate. And boom, that's your taxable benefit.
Okay, let's make this real. Let's take Sarah, who's a manager up in Manchester. Her company car has a list price of £30,000. The BIK rate is 30%, so her taxable benefit is $9,000. Now, if Sarah's a basic rate taxpayer, she'll owe £1,800 a year for that car. But, and this is the important part, if she's a higher rate taxpayer, that bill doubles to £3,600 for the exact same car. Your tax bracket makes a huge difference.
And now for a pro tip, straight from the team at ProTax Accountant. This is something they see all the time. Your tax code is what determines how much tax comes out of your pay. If that BIK calculation is wrong, even by a little bit, you could be overpaying for months and not even know it. So the message here is, don't just trust it. Go online, check your personal tax account, and make sure the numbers are right.
Okay, that's not all. Here's where things get really interesting, especially for current and future EV drivers. For years, driving an electric car meant some pretty sweet tax breaks. It was all about encouraging us to switch. Well, the party might be over. Let's see how this builds.
And this slide just lays it out perfectly. The era of zero tax for EVs, it's ending. From April 2025, they are being brought into the main VED system, so they'll be paying road tax. And it's not just a one-off. After the first year, it'll jump up to the standard rate, which is getting close to £200 a year.
But wait, there's more. And stay with me, this next point might surprise you. If you're buying a premium EV, one with a list price over £40,000, you're going to get hit with this extra luxury surcharge every single year for 5 years. That's nearly £2,000 in extra tax. All of a sudden, those fuel savings start to look a little smaller, don't they?
Okay, let's talk to the business owners out there, the freelancers, the small business owners, the self-employed. If you're using a vehicle for your business, HMRC is definitely paying more attention to expenses. So getting this right is no longer a nice-to-have. It's absolutely essential. So, the crucial point for any business owner is to know the rules. Let's quickly run through the 4 most important things you need to remember for 2025/26. 1. Capital allowances for cars with higher emissions are now severely limited. 2. Good news, you can still claim 100% first-year allowances for new electric vehicles. 3. You can reclaim half the VAT on lease payments even if you use the car personally. And 4, and I can't stress this enough, detailed, accurate mileage logs are not optional anymore, they are essential.
So, where is all this headed? Well, let's take a look ahead. The government is seriously considering a completely different system, pay per mile. Now, nothing's set in stone yet, but this would be a radical shift, potentially replacing fuel duty for good.
The proposal on the table is a new tax for electric vehicles of up to 3 pence per mile, maybe starting after 2028. What does that actually mean? Well, a drive from London to Edinburgh could cost you an extra 12 quid. The thinking is pretty simple. Make sure everyone who uses the roads contributes to maintaining them.
But what do people think about this? Well, as you can imagine, public opinion is pretty divided. A recent poll shows that while there's a good chunk of support, a lot of people are still against it or just aren't sure. This is definitely one to watch over the next few years.
Okay, we have covered a ton of ground. So let's bring it all together into a clear, actionable summary. This is what you can do right now.
So what are the key takeaways? Here are 4 practical steps you can take right now to prepare and, honestly, potentially save yourself some money. First, before you buy anything, check the car's CO2 emissions and calculate that first-year tax. Second, if you're a company car driver, log into your HMRC personal tax account and verify your tax code. Make sure it's correct. Third, for business owners, it's time to review your vehicle strategy. Leasing an EV might suddenly be way more tax efficient. And finally, if you're self-employed, download and start using a digital app to log your business mileage. Do it today.
So let's end with this question. With all these new rates, sneaky surcharges, and changing rules, are your car tax calculations actually correct for 2025? Or could you be facing an unexpected and pretty unwelcome bill?
Okay, just a quick and important disclaimer. The information in this presentation is for general purposes only. It's really important that you don't rely on it exclusively to make financial decisions.
So, before making any decision, you really must consult the tax experts. For personalized advice on your specific situation, contact the team at ProTax Accountant. They can help you navigate all of these changes and make sure your vehicle strategy is as tax efficient as possible. You can reach them on WhatsApp, phone, or by email. Thanks for listening.